BioVentures, a venture capital firm located in Philadelphia that invests primarily in life science companies with outstanding growth potential. Mr. Neff is testifying today on behalf of the National Venture Capital Association, the leading trade association that represents the U.S. venture capital industry with over 450 member firms. Welcome, Mr. Neff.
Thank you, Mr. Chairman. Is this on?
It's on.
Thank you, Mr. Chairman, Ranking Member Fallon, Mr. Ellsworth. I'm a founding partner of Quaker, which is a Philadelphia-based venture capital firm investing only in life sciences companies with outstanding growth potential across all stages of development. We raise money from institutional investors of many types and invest those funds for the long term in innovative startup companies. All of our funding and efforts go toward company growth, not financial reengineering. In most cases, venture capital is the only funding source for these companies at their stage of development, as the risks are way too high for traditional bank and other financing. Venture capital is a relatively small asset class, and it should probably stay that way, with approximately $28 million, as Representative Fallon mentioned, invested on an annual basis over a fairly consistent period of time, with a notable blip in the early part of the 2000-2001 period. Last year, that capital went into 3,800 different companies in the United States. Despite our size, our industry has created exponential value for that investment dollar. Venture-backed companies account for more than 10.4 million United States jobs and 2.3 trillion in U.S. revenues, or 18% of the entire GDP. And we estimate that 1 out of 3 Americans have benefited personally and directly from venture-backed medical innovation. Organ regeneration and development of drug therapies for macular degeneration are just 2 of many, many innovations represented in our portfolio of over 30 companies, which also contribute thousands of jobs to the regions in which we invest. While the venture capital community is not in need of rescue by any means, and in fact has money available to invest in emerging growth companies, there are critical ways in which policymakers can support our efforts to continue to build innovative American companies. First, we support maintaining capital gains tax treatment for the carried interest portion of our investment return. This tax policy has proven to motivate venture capitalists to make long-term investments in creating new companies and jobs that did not exist before. Encouraging this investment behavior is exactly what Congress intended when it enacted capital gains tax legislation many, many years ago. It is critical that VCs continue to be rewarded in a manner commensurate with the huge risks we take. Otherwise, our risk-reward equilibrium will be thrown off, and even highly promising companies will not get funded because we cannot justify the risk. The President's budget has a provision to change carried interest tax rate to ordinary income, effectively tripling taxes of those most responsible for new company creation. At a time when our company needs to create jobs, such a change is counterproductive for economic growth. We ask that you look very carefully at each industry impacted by the change in carried interest tax rate and enact policies that are fair but continue to promote long-term investment rather than to choke it. Next, we need government funding for basic research to fuel the innovation pipeline from which we draw to create our companies. A great example in our portfolio is a company based in Connecticut called Optharion, developing truly novel therapies for macular degeneration. Optharion was created from NIH-funded technologies in 4 universities: the University of Iowa, the University of Pittsburgh Medical Center, Rockefeller University, and Yale University. We combined all of these technologies together with an experienced management team, have raised over $30 million in venture capital funding, and the company's drugs will begin human testing later this year. We applaud the allocation of a significant chunk of stimulus dollars to continuing basic scientific research in the university's academic centers. Other areas such as the SBIR grant program, venture-backed companies have been unfairly excluded, in our opinion, from applying as there is a misconception that venture-backed companies are not small businesses. This, as you know, is not true. Venture-backed companies are often without revenues and with employee counts in the single digits. Without federal funding, these companies often cannot move forward with basic research projects. We commend this committee for passing legislation last year addressing this issue and hope to permanently resolve this issue this year. Third, we ask that government look at the many instances where regulation has created additional burdens and uncertainties that threaten the growth of small companies. For instance, many companies are struggling with the cost of Sarbanes-Oxley compliance, which continues to place a very expensive burden on small entities. In our sector, the life sciences sector, regulatory uncertainty at the FDA continues to have an adverse impact on our ability to make investment decisions. When the rules are changing, you don't know what you're investing in. And it's very, very difficult to decide that without clarity. Lastly, the government can protect innovators better through an approach to patent reform that recognizes the disproportionate burden for smaller companies when defending against patent infringement. This protection, in our opinion, should include a post-grant review process that's limited to a very short period, 12 months, so that small companies are not subject to endless patent challenges by large corporations. It also involves meaningful infringement penalties in situations so that we can really defer large companies from infringement that today is not adequately costly to them. Another area of protection that's important to us is the protection of companies that have invested millions of dollars, decades of development, bringing novel biologic therapeutics to market. If generic alternatives are allowed to enter the market shortly after the original is made available, the original innovators will not be able to recoup their investments. No investor will be able to fund them profitably, and innovation will stop or slow. Venture capital industry remains committed to investing in the very most promising, innovative small businesses our country has to offer, but we need to maintain an environment that allows these companies to thrive. As Congress considers policies that impact startups and the startup community, we appreciate the opportunity to offer an ongoing voice that supports the viability and growth of these entities. Thank you.